What if I told you that just $100 invested today could become thousands later? Most people believe investing requires a lot of money. That's simply not true anymore. In fact, some of the best investors started with surprisingly small amounts of money. But there's one mistake stopping most people before they even begin investing. Stay until the end, because I'll reveal that costly mistake and how to avoid it. Many people delay investing because they think they need a higher income first. They tell themselves they'll start next year when they have more money available. Unfortunately, next year often turns into several years of waiting and hesitation. Meanwhile, their money sits idle and does absolutely nothing for them. Inflation slowly reduces the value of money every single year. Imagine leaving ice cream outside on a hot summer day. That's very similar to what inflation does to cash over time. Your money buys less and less as prices continue increasing. Investing helps your money grow faster than inflation in many situations. That's why starting early can make such a huge difference later. Now, things start getting really interesting for new investors. You don't need thousands of dollars sitting in your bank account. Even investing $20 each week can create meaningful results over time. Small investments made consistently often outperform waiting for the perfect moment. And that consistency is exactly what builds long-term wealth. Wealthy investors don't rely on luck. They rely on strong habits and discipline. Successful financial habits repeated regularly often create extraordinary long-term results. Investing consistently helps build habits that support financial growth and success. Your future self will thank you for every smart decision you make today. Time does most of the heavy lifting when it comes to investing. Now, let's talk about the real superpower behind wealth building. That superpower is called compound interest, and it's incredibly powerful. Your money earns returns, and those returns start earning returns too. Over time, the growth begins accelerating faster than most people expect, and that process keeps repeating year after year automatically. Think of it like a snowball rolling down a hill. At first, the snowball looks small and unimpressive, but as it rolls, it becomes larger and larger. That's exactly how wealth is built through consistent investing. Growth feels slow initially, then becomes surprisingly fast later. Unfortunately, many beginners make avoidable mistakes during their investing journey. One mistake is trying to get rich as quickly as possible. Many investors chase whatever trend happens to be popular. They buy simply because everyone else seems to be buying. Then they panic when prices fall and sell at the worst time. Successful investors stay calm when markets rise and fall. They understand that short-term movements are completely normal. Instead of focusing on today, they focus on where their investments could be years from now. They don't let fear or excitement control decisions. Logic usually beats emotions when investing money. Another common mistake is investing money you'll need very soon for important expenses. Your emergency fund should stay separate and available whenever unexpected problems appear in life. Think of an emergency fund as a financial safety net, protecting you from life's surprises. Many beginners constantly check prices every hour, hoping to see instant investment gains. But watching every market move often creates stress and leads to poor financial decisions. Patience is one of the most valuable skills any investor can develop over time. Remember this simple rule: patience usually wins, while panic often leads to mistakes. Now, let's imagine I only had $100 available to invest today. The first thing I would do is start immediately instead of waiting any longer. Many people wait for perfect timing, but perfect timing rarely ever exists. I would focus on learning, improving, and gaining real investing experience along the way. Experience teaches lessons that books alone simply cannot provide to new investors. Remember the biggest investing mistake I promised to reveal at the beginning. It's not picking the wrong stock. Even experienced investors make mistakes sometimes. And surprisingly, it's not market crashes either. Markets have always recovered throughout history. The biggest investing mistake is waiting too long to start your investing journey. 10 years from now, you'll wish you started today. Comment start if you're ready. Before you leave, ask yourself one question. Will your future self thank you for starting today, or regret waiting another year?